Right now, we are looking at one of the most fascinating corporate clashes of the decade. We're breaking down Adobe's pivotal 2026 trajectory and offering a high-conviction forecast for 2027. And what we're really examining here is a massive tug-of-war between extreme market fear, this idea that AI is going to wipe Adobe out, and the company's incredibly aggressive, highly calculated AI offensive. So right now, the broader market is totally gripped by what we can call AI existentialism. There's this palpable, deep-seated anxiety out there that disruptive tools, things like Google's Gemini or Canva, are just going to come in and eat Adobe's lunch. And this existential dread isn't just talk. It literally drove Adobe's stock down a staggering 28% to around $240 earlier in 2026. Wall Street is essentially pricing in a severe, company-ending threat. But contrast that massive fear with the actual reality on the ground. Adobe's AI offensive is anchored by a massive $6.4 billion in Q1 revenue. That's a 12% year-over-year growth. And what's even crazier? They are seeing incredible 133% US commercial growth spikes. Look, that is simply not the financial footprint of a company being disrupted into oblivion. That is an entrenched giant leveraging AI to make its moat even wider. To really understand where this is heading, we're going to step through 5 key areas today. The Post-Narayen power vacuum, the shift from Copilot to agent, the Geo Masterstroke, financial signals, and finally, the 2027 forecast. Okay, starting right off with Section 1, the Post-Narayen power vacuum. So, after 18 years at the helm and exactly 100 earnings calls, Shantanu Narayen is stepping down in March 2026. This is the visionary who successfully navigated Adobe's last near-death transition to the cloud. His departure carries immense emotional and financial weight. It leaves a huge power vacuum right at the dawn of the next massive technological shift. Which brings us to the successor search, led by lead director Frank Calderoni. The board is aggressively vetting internal heavyweights like David Wadhwani against external SaaS and AI leaders. And this isn't just a standard leadership transition, it's a high-stakes crossroads for Adobe's actual identity. The new CEO has one absolute mandate: definitively prove Adobe's relevance in the generative AI era. Moving right along to Section 2, from Copilot to Agent. 2026 was essentially the defining year of the Adobe CX Enterprise Coworker. We are moving firmly out of the chatbot phase and into the era of agentic AI. For users, this means the software is no longer just a tool you poke at, it's an active partner that autonomously orchestrates complex marketing and reasoning workflows. It shifts humans from being in-the-weeds technicians to high-level creative directors. You see, the era of human-assisted AI, where you just sit there doing prompt-based editing or really tedious frame-by-frame manual manipulation, that's over. Adobe is totally abandoning that model. Instead, they're embedding themselves as the ultimate enterprise workflow orchestrator. You give it the vision, and the AI agent generates the campaign variants and executes on the outcomes. And honestly, this pivot is already working beautifully. High-value AI modalities are absolutely exploding. Video generative actions grew an unbelievable 8x year-over-year. Audio generative actions doubled, and the annual recurring revenue for the Gen Studio family grew over 30%. In fact, overall, their new AI-first offerings have more than tripled their ARR. Enterprise adoption is accelerating incredibly fast. Which brings us to Section 3, the Geo Masterstroke. The whole internet is currently shifting from traditional SEO to GEO, Generative Engine Optimization. This is all about shaping how a brand appears not just on standard Google links, but across large language models and AI assistants. And in a world that will be totally dominated by LLM search results by 2027, Adobe wants to own that entire ecosystem. And that explains a massively misunderstood move: Adobe's $1.9 billion acquisition of Semrush. When this happened, a lot of people on Wall Street really scratched their heads, like, why buy an SEO company right now? But when you look under the hood, it's actually a brilliant, highly calculated strategic play. By integrating Semrush's deep intent data and search behavior analytics before content is even created, Adobe guarantees it's going to be the definitive gatekeeper for brand visibility in this new AI search world. It connects the insight, the execution, and the measurement all within a single Adobe ecosystem. They're effectively future-proofing enterprise marketing against LLM dominance. Let's look at Section 4, financial signals and buybacks. Remember that market panic over AI disruptors we talked about? Well, despite all that, Adobe just posted a record Q1 2026 cash flow of $2.96 billion. The core business is generating an absolute ocean of cash, keeping them firmly on track for their massive $26 billion revenue target.
And then, they followed that up immediately in April 2026 by authorizing a jaw-dropping $25 billion stock buyback program extending through April 2030. Now, think about this. When a board authorizes a capital return program of that magnitude while the stock is down 28%, they are sending a very loud, very clear message. Internally, they believe their 2027 cash flow is absolutely bulletproof. I mean, just look at this financial flex. We're talking 89% gross margins, an incredible 44.5% non-GAAP operating margin, 13% subscription revenue growth, and over 850 million monthly active users. That is a deeply entrenched enterprise ecosystem. Competitors simply cannot replicate that kind of durable financial power overnight.
All right, finally, Section 5, the 2027 Valuation Forecast.
Looking closely at the valuation, Adobe's been trading at a severely compressed forward PE of roughly 11 to 14 times, sometimes even dipping to a 9.60 forward PE. When you compare that aggressive compression against the broader software industry average and against their own historical norms, the clash is glaringly obvious. A software giant with 89% gross margins trading this low means the market is pricing in a massive disruption that simply hasn't hit the income statement yet.
So the ultimate question for sophisticated investors is whether Wall Street will be completely forced to reprice this stock as Adobe's AI offensive fully materializes. Can they recapture that historical growth stock premium by 2027? If the new leadership can successfully transition their massive enterprise base into orchestrators of these AI agents, this current valuation might go down in history as a classic market overreaction. The 2027 catalysts are super clear here. Watch for the new visionary CEO announcement, widespread enterprise adoption of CX Enterprise, and the aggressive monetization of commercial safe video AI.
So, to wrap up, the big question you have to ask yourself is this: is the market right to fear the AI revolution, or did they just hand us the greatest mispricing of a software monopoly in a decade? Please remember, this explainer is strictly for educational and informational purposes only. Always do your own rigorous research before making any investment decisions. Thanks so much for joining me to explore this massive corporate transformation. Catch you next time.